Hello, everyone. I'm Edmund Bradford, and I'm delighted to have with me today Professor Malcolm Mcdonald. And we're going to be talking about marketing, shareholder value, and how that connects to being a good company. And in this video, we're going to be looking specifically at that link to being a good company. Professor Malcolm Mcdonald, thank you again for joining us. How do you think a good market strategy, how can that contribute to a company being a good or better company in the future?
Well, Ed, I think of all the questions you've asked me over the past few years, that's probably one of the easiest to answer. And there is quite a lot of research to back up what I'm saying. Let me give you an example. I had a professorial colleague at Cranfield called Hugh Davidson, Professor Hugh Davidson, probably quite well known to anybody who's listening to this. But he did some research over a number of years, and he wrote this book called The Committed Enterprise. And I forget how many respondents there were, but I think it was something like 30 major companies that over many, many years had been successful. And it was interesting that every single one of those organizations had been good citizens, if you're, and properly embraced what we call CSR, corporate social responsibility. But if you bring yourself up to date and you look at a company like Unilever, I was privileged to be sitting in an audience recently when we were interviewing Paul Polman, who's the group chief executive of Unilever. And I can tell you that, and it isn't just window dressing. Every single thing that that Unilever do, it's ethical behavior permeates everything they do. And I'll just, if I may, just read out a quote from Paul Polman. He said, "If you want to make the company grow longer term, you have to get out of the rat race of quarterly reports and quarterly behavior. Many companies manipulate their behaviors and their spending to avoid missing expectations." And I mean, this is true. This is what he did. And quite interesting, over a 10-year period, the share value has tripled of Unilever. All of that, hand in hand with CSR and good behavior. So a real exemplar. You compare that with somebody like Enron, and there may be people listening to this who can't remember Enron, but Enron was focused on budgets and short term, and people used to cheat and lie, and they got to the point where they even broke the law, and you know what happened to that organization. Now, just a quick aside here, and that is that cost cutting isn't a strategy. I know, Ed, you've heard me talk about it before. I call it anorexia industrialosa, an excessive desire to be leaner and fitter, leading to emaciation and eventually death. And I say, well, how many pence are there in a pound? How many cents are there in a euro? How many cents are there in a dollar? It's finite. There's only so many of those you can cut. And I'm not suggesting you shouldn't be cost effective. What I'm suggesting is that you need to go back to the fundamentals of understanding your markets, understanding the needs of people in those markets, and making an offer to them that makes people want to buy from you rather than from somebody who's got something similar. So to summarize this, to me, it's easy to say this, very, very difficult to actually achieve the way Unilever have done it. But to me, what we should be doing is trying to build great relationships with markets and customers. And if you can create value for customers, that's great for those in the company who create that value. It's great for all stakeholders, and it's great for the planet. And that's really where, as I say, it's not easy to do, but there are organizations around like Unilever, one of the biggest companies in the world, that live and breathe good corporate behavior, and the results are showing financially. So that's possibly not a direct answer to your question, Ed, but they're just my thoughts off the top of my head.
No, you have answered it, and they're very good thoughts. And we've talked about Unilever before on this these videos. They're a really good company to think about. And I think one interesting aspect of Unilever is how, when they were looking at having better labour conditions with their tea plantations, they realised that actually there was going to be a problem with, if you pay your suppliers more money, of course, there's a danger that you're going to have to put the prices up and therefore lose market share. But they did their market research and realised actually that there was some price inelasticity there, and they could actually put prices up if they targeted the tea in the right segments. And I think for me there's a moral there that, again, marketers and market strategy has a big role to play in companies becoming more sustainable, because you can point your products, your brands, your whole company towards those customers that are interested, that have those sort of needs. And as you said in the earlier videos, Malcolm, try to steer away from the ones that may say they're interested but actually are not when they get to the checkout, and try and position yourselves better amongst the growing mass of consumers. And let's not forget B2B, Malcolm, the key accounts. Those key accounts, some people watching this may be serving Unilever. Those accounts that actually themselves are generally interested in having a good supply chain. So marketing's got a good role to play, both in market segmentation, positioning, as well as helping the key account management community. Is that right, Malcolm?
Hear, hear, Ed.
Yeah, excellent. Okay, that's great. Well, hopefully that's been useful to everybody. I feel we are scratching the surface, but very, very useful. In the final video, we're going to get onto the subject of branding and just get Malcolm's views as to what he thinks makes a really good brand. So again, thank you, Malcolm, and look forward to catching up with you soon.